Hi there, Serial Trader here. Do a quick check-in on crude oil here, and history was made today. And I wasn't personally aware that oil could trade below zero. I guess I knew it was theoretically possible, but I never thought it would actually happen. And the low we made today on the May contract was negative $40.32. Uh, Now, of course, if we go to the June contract, let's have a look at that. So the June contract has only gone as low only as $20.19. So there would be some that would say, oh, just ignore that May contract. That's an anomaly. And okay, if you want to take that stance, that's fine. But the bottom line is, it really happened. The contract in May, which is, currently the front month contract, I believe it's rolling over tomorrow to June, but the bottom line is it really did trade at one point negative $40.32. So that actually happened. So I'm not going to ignore that. Now, that could very well be for one thing to point out here. So in the history of oil futures, since they've ever been trading, that's by far the lowest price ever seen. If we go back here, now I don't know for sure whether this is all the futures data that exists, but I think it might be. So if it is, this trading view chart goes back to 1983. Now the low up until today was made in 1986, and that was at 975 per barrel. And obviously today we've just absolutely obliterated that, going into negative territory in a major way. So that being said, I don't really care to throw up any wave labels in this chart. The overall wave count for years now has suggested significantly lower prices. Well, we've certainly been seeing those. And if we go here on the daily chart, maybe I'll just throw some candles on this thing. You can see this enormous red candle where it opened, let's see, it opened at 1773 and closed at negative $37.63. So truly extraordinary. Definitely a historic moment in the oil market here. But you can see already, at least on this trading view chart, we've rolled over. And here's the rollover gap. So right now, I believe this is the June contract sitting around $21 or so. But even though it's rolled over on this trading view chart, I don't think the May contract actually closes until tomorrow at some point in the trading day. So who knows? The May contract could go even lower than negative 40 there. We'll have to see tomorrow, just for interest's sake. But the point is, I don't really want to try and play the oil futures in an environment where, literally anything can happen. Imagine you were long a couple contracts and it went down to negative 40 and somehow you got stuck in that. You could have had massive losses. So I think the best way to look at this is potentially with some options or with some ETFs. But I'm not even currently interested so much in that. And, once we have some sort of bottoming process and maybe a little impulse wave to the upside and a corrective wave down to a higher low, then I might be interested in taking some more kind of directional futures positions or options positions. But for now, this is a falling knife times 1,000. So I'm not interested there just yet. But if we go over to what I might be interested in, and this is basically what I did to take advantage of that oil bear market in 2015 and 2016. Now I remember what I did. Of course, I didn't catch the bottom, but near the lows, I loaded up on a few select stocks, high quality oil stocks. And believe me, there's lots of crappy oil stocks out there, and lots of them are probably going to go bankrupt and get delisted and all that. But there's a few that you can pretty much bank on not going away and surviving, and then eventually coming back in a big way. So ExxonMobil, definitely top of the list here, one of the top on the list. And you can see right now, ExxonMobil, well, in that sell-off we had, let's see, in March, we got close to the 2002 low in ExxonMobil, which was at 29.75. So far, we've gone as low as 30.11. Now, I think that'll still break. So this is the monthly chart. If we go to the daily chart, and let me just get rid of the volume bars there just for a little more clarity. On this daily chart, I think this bounce we've had off the bottom that we made in March on Exxon, I think it's corrective, and I think we'll head down to make a new low below that. And at that point, the market itself would likely be making new lows, which is what I'm expecting eventually for the overall market to go down and take out the March lows. So when that happens, and it looks like it's kind of bottoming out and stabilizing, and we get below that $30.11 a share, I think that'll be a very interesting area to start putting on some long, just simple long stock positions, or perhaps some leaps calls, so very long dated call options, a couple of years out, however far out you can go really, for that likely, I'll call it inevitable recovery in oil prices, and obviously would coincide with a recovery in these major high quality oil stocks. So Exxon, just some things to put on the shopping list. ExxonMobil, looking for lows below 30.11, and then once we have some signs of bottom, putting on some longer term positions on that. That's what I'm looking at. Royal.Shell. So RDSB, this is the US listed Shell shares. Those are the ones I'd be looking at when I go to do this. So monthly chart of RDS here. Now Royal.Shell chart goes back farther than this, but these American listed shares I think only started, let's see here, 2005 or 2006. So the lowest these American listed shares have ever been. And if we go into the daily chart on Shell, I'll get rid of the volume again just for clarity. Same idea as ExxonMobil. We made a low in March. I believe that low will get taken out when the market, if and when the market turns down and takes out its March lows. I expect this will as well. You gotta remember these oil stocks, yes, they have a correlation to oil, but they also have a correlation to the broader market. So you better believe if the overall market's tanking down to below its March lows, these stocks will almost surely follow. So I'm going to definitely have this on the shopping list. Once we get below this $19.19 low we put in March, start stabilizing, this will be on the shopping list for a long-term position. And Chevron, this is the third pick that I'll be looking at. And again, Chevron, lowest levels we've seen since early to mid 2000s anyways. So I think if we go on the daily chart here, daily chart, same idea on the daily chart. I think the March lows will get taken out when the market really dives down in the next wave down. So I'll be interested in Chevron once we get below that 51.60, start to show signs of stabilization. Now, who knows how far below we could go? I mean, we could go down, I don't know. Let's just do a little, let's just pretend, I mean, you can do this yourself, but just as a little example, pretend we got a little ABC up here, which is probably what we got going on. A little three-wave rally off the bottom. Now let's just do a quick target, do a reverse Fibonacci projection of this ABC up, assuming that the top's already in, and do the common objectives. Now you can do this on all the other charts I showed you too, but this is just an example. So we got the 1.382 and the 2 reverse fibs. So you can see there's a pretty wide range here once we start getting volatile like this. So anywhere from $13 to $36 or so. That'll be what I consider kind of the buy zone potentially. But again, once this actually starts happening, I'll be examining it in greater detail for wave patterns and structure and fib relationships and all that. But all I can say is right now, expecting to go below the March lows and all these names. And once we do that, once we look mature to the downside, that'll be a very interesting area for me in these three stocks to put on some longer term bullish positions. And again, like I said before, I had success doing this. Probably my most successful oil related trade was going long these big names in 2016, 2015, 2016. And you can see Chevron actually bottomed in August of 2015. And let's see, it bottomed at 69.58, went as high as 133.88. So they all, had a good double or so off the bottom, give or take. You have to look at each chart to see what it did. I think we'll get, a similar result this time once it finds its bottom, which I don't think it has yet. All these names, I think you'll get that kind of generational, or at least once in a decade kind of buying opportunity, and potentially be positioned extremely well for a new oil bull market, which will happen at some point. It may not seem like it right now, but it is likely to happen down the road. Not there yet, though. Okay, so that's really all I wanted to go through here as far as what to do with this oil destruction. So yeah, personally, I'm staying away from the futures here until I see something I recognize, see some sort of technical pattern and setup that I recognize. Once I see that, I'll certainly share that, and certainly if I'm acting on it, I'll share it. I tend to only do videos on stuff that I'm actually actively going to trade or do something with, so if I'm not doing anything, I tend just not to cover it. But that's kind of my 2 cents right now on the oil market. And should be interesting tomorrow once we actually close that May contract and June becomes the front month. See what happens in June. Does June just start tanking the way May did, or do we find some stability at well, I wouldn't call it high levels, but much higher levels than negative 40. So we'll have to see what happens tomorrow and the rest of the week. But definitely, bottom line, long term, I'm eyeing up those three big names that are likely not to go out of business. And that's how I'm looking to play this once things kind of present themselves the way I want them to. All right. Serial Trader signing off.